Good morning, welcome to this update on Monday the 25th of July, brought to you by Phoenix Blue. I'm Tom Colley and I'll talk to you about this week's markets and the news. Let's start over with the news. On Friday we had some numbers out of the UK. The one of particular interest to us was the services PMI. Bear in mind how dominant services are within the economy in the UK. That figure for the economy in general is much more significant than the manufacturing PMI there. Now the manufacturing PMI did come in above forecast. That was a nice number for the UK economy, but that was a particularly bad number. The services PMI, for the reason I've just mentioned, we forecast 48.9. The figures came in at 47.4. Anything below 50 is considered contraction, so even the forecast was contraction, but the services PMI had contracted even more than expected. We had news out of Canada in the afternoon, core CPI coming in as forecast, and then some good core retail sales. Over the weekend we've had the G20 meetings, the meetings of the 20 biggest industrialized economies of the world. In terms of what we're interested in, we had a reiteration of the fact that these economies will not enter into currency wars, so they will not competitively devalue their currencies against one another. That might be disputable because it's possibly the extent of that devaluation, but that's what came out of there. The only news we've got today, or major news, is the German info business climate at 9 a.m. this morning. Now, through this week, two of the really big items. We've got the FOMC federal funds rate and statement on Wednesday evening at 7 p.m. There is no press conference on this occasion. Expectations is there'll be no movement in the rate, so all the focus will be on the statement and how hawkish that statement is looking to the future towards interest rate rises. My feeling is we won't see anything significant ahead of the November presidential elections because they are concerned that any sort of action could potentially be considered political or politically biased. Then on Friday, early Friday morning, we have the Bank of Japan monetary policy statement, outlook report and press conference. That will be interesting. We'll be looking at the yen in a moment. We're expecting further quantitative easing measures from the Bank of Japan, so we'll be very focused on what comes out of that. Okay, over in the Far East overnight, in their overnight session, this is the Shanghai Composite. Well, we've had what we expected to see here. We're seeing a retest of this trend line here. There's a big level of 3,000 here, which is the level through there that it's retesting within confluence. We'd expect to see further upside on this, but we will wait to see that play out. Over on the US dollar Chinese yuan exchange rate, this is a reflection of what I said about the G20 meetings, where all the partners in the G20 had agreed not to devalue competitively. China has in the past been pulled up on this. Just off this chart to the last summer, there was some proper devaluations where price moved in one day, the sort of amount we've seen it move in, say, 3 months here. We're at a key level at the moment. This is the previous low valuation. Bear in mind this is US dollar strength up, Chinese yuan strength down. So we've seen through here a weakening of the Chinese yuan. This is a key level, as you can see here, because these are the daily closes of the previous low, and you can see we've been hanging around those areas for a considerable period of time now. Over on the Nikkei, the Japanese equities, well, we've got a trend line here. There is a level through there that's not marked on this chart. We were looking at that last week as a potential pullback retest to the long side. Because of the Bank of Japan quantitative easing that we're expecting, we have got a long bias on this market. However, last week the Kuroda, the governor of the Bank of Japan, categorically said that there would be no helicopter money, which is a term suggesting money virtually being thrown at the economy. He was, or it was reading between the lines, he was saying that as our very, very much last resort. He insists they've got other ideas and efforts in the pipeline. So we didn't take a trade there. Price action didn't support what we were looking for. We're now looking for a break of this higher level up here to take to the long side, and our targets will be up at this sort of level here. We saw a very similar thing for exactly the same reason on the US dollar JPY, the yen rate. This time we're at a key level in confluence with a falling channel here. We didn't get the breakout here. We were at this level when we got the statement about the helicopter money from Kuroda. So we had a strong pullback there. So we're very much in a waiting phase in this area. And one of the things that's going to be very significant in what actually happens in those two markets is the US dollar. This is the dollar index. Clearly we've got a channel here, a level through here at 97.25. We appear to have had a break above this level. We need some more confirmation for the long side. That will give us a weakening and a long trade potentially on the yen. It will also give us a strengthening of the Nikkei 225, the equities, again to the long side, and another potential trade there. But we will need to see confirmation of what we've seen over the last couple of weeks there, which is a strengthening US dollar. The thing to be aware of is what I've already mentioned is the Fed funds rate statement and the FOMC statement on Wednesday night. So unless we see something quite significant in terms of confirmation of strength there, we'll be trading anything very cautiously ahead of that statement. We'll not be leaving any risk in the market through the statement, but we may find the statement giving us the confirmation if we haven't had it before. We'll see a lot of markets in and around key levels at this moment in time for exactly the same reason. Here's the euro. We've got a level through here. If we see dollar strength, we're going to see a break, potentially pull back, retest to the short side, which is the way our bias is in this market. But we'll need the dollar strength to come in or something unforeseen to happen before that will actually occur. Over on the pound, well, we talked about the services PMI on the UK that came out on Friday. We were short this market at this level here. This level here on Friday. Forgetting this is a daily chart, but intraday trade. The PMI came out and took us straight down to this level, made us between 3 and 4%. So that was a lovely trade on Friday. We are money off the table, stops at break even, and we're looking for a potential break of this lower level here to take that to the downside further, but we will wait for that break. Over on the Aussie, another key level here. There is a trend line up through there as well. We will be looking for dollar strength to break this to the downside, pull back, take this market short in exactly the same way. So that's another pair at a major pair or major minor pair at a critical level. Here's CAD, Canadian dollar, US dollar CAD. We are exactly the same here. If we get dollar strength, we're going to get a break above this level. We'll look for a retest to take this to the long side. We'll also be looking potentially at a matching trade on crude oil, which would obviously in that instance be to the downside. Over on the S&P, well, we've had a bit of consolidation last week at these new highs here. We wait to see what happens. At this moment in time, we are nominally risk on. We've had this move through here. Money's going into equities, into risk markets, coming off out of safe havens such as gold and silver. An area of interest here is around 21.20. You can see why it's of interest. We'll be looking potentially for a trade to continue the long side here. If we get a break to the downside here, then that would clearly be back into a risk-off scenario. I've just got those in the wrong order. Here is gold. We are, as we say, we're risk off in this marketplace at the moment. We've been short since the highs here. We had an add-in entry at this level here the back end of last week. We have taken some money off the table and reduced our risk in that area for the simple reason that what's happened in the intervening time, this is our target for that trade. We are either going to see it reach there and go back to the long side in a risk-off environment, or if we get in a risk-off environment. If we get risk on and we get, say, the S&P pull back to that 2120 level, we'd expect to see a break, pull back and retest this to the long side, which to our next level, which is about 1250. Now I skipped through Palladium there. As you know, we've been talking about the fact we've been trading commodities to a far greater extent through the last 4 to 6 weeks. Mainly, can't say that, mainly because we have seen little opportunity or a limited number of high probability opportunities in FX markets. We use the same techniques. In this instance, Palladium, it's up at a level, at top of a channel. It's seasonally short through August, and we have a commitment of traders extreme signal here, which suggests that the market may be reaching a top. We take all those factors into account. This market is of great interest to us. We'll be looking for a possibly intraday break below this second level here and a retest to take this to the short side to the bottom of the channel. At this moment in time, that potentially looks like the most interesting new trade in the commodities. We're also continuing to look to the downside on soybeans, see if there's any more potential downside on corn, when we've had some lovely profits over the last few weeks. And we're also looking at wheat to the long side, although we were stopped out last week of a trade that we've been in for the better part of 10 days, 2 weeks, for that long trade, so we'll be looking for a more cautious entry back into that. Okay, that's it for today, guys. If you like what you see, if you like the way we chart, clean charts, no indicators, we have a free trading event on August the 24th in London. Give the opportunity to trade alongside our 2 most senior traders for 4 hours of free trading. Lots of questions, answers. If you're interested in that or have any questions whatsoever about exactly what we do, how we can help take your trading to the next level, visit the website at phoenixblue.co.uk or email us at info@phoenixblue.co.uk. I'm on tom@phoenixblue.co.uk if you've got any specific questions about this video. But only remains for me to wish you a successful trading week. Trade carefully. Be aware of the 2 big central bank announcements we've discussed. And look forward to speaking to you again later in the week. Goodbye.